What's up, guys? I have another video for you on this course. So this is a nuanced video. So there are certain nuances that I found over the years that happen with the setup or the strategy that I've taught you so far, and those three things are three-legged formations. They're also single-leg and multi-leg formations. Understanding how to take advantage of those, 50% drawdown cut, and Fibonacci target stats. So those are three things I'm going to be talking about, and it's really going to help with finding key opportunities and minimizing your losses, minimizing your losses, and knowing when to actually go all in and use A grade risk if you are using uh, varying risk. So, three-legged formation is just you have an impulse and a correction, and it's a flag formation, and you have three legs, right? So, when I say legs, I mean three branches, right? Three minor trends within the correction, right? So, we have one leg, two legs, and three legs here, right? And let's see how it looks on the line chart to see if it's clear. It's not that clear. It'll probably be clear on the daily. Nah, we're going to stick with the candles. It's clear on the daily. You got one leg, two legs, three legs with candlesticks. But we're going to stick to the 4 hour for this example. Got a huge impulse. We got one leg, two legs, three legs. And this third leg is what we're entering off of. That's our entry. And we want this third leg to actually get below the second leg, the start of the second leg, right? You see how it just dips below that second leg, and then it gives us a doji formation. We can enter off that doji formation, set our stop just beneath that low, and look for targets at this high, right? And later I'll talk about why it's important to set the target at the high, or why it's beneficial to set the target at the high, and also why setting the stop beneath this low instead of setting the stop beneath the Fibonacci level. Because if we set our stop beneath the Fibonacci level, this is what it will look like. We get an entry off of the 50 Fibonacci level here. It's our kill zone right here. We place our entry off the single leg formation, so off the close of this candle, and our stop goes beneath this 61.8, and our target goes at this high or at an extension level. We're just going to target this high for now. And again, I'll tell you why that's important later in this video. So we'll get a 4.2R, right? Whereas if we set our stop beneath this low in this situation, we get a 13.7R. Huge difference. 4R and 13R. Huge difference. Okay. Now, I have found the three-legged formation to be the highest probability setup between the single leg and the multi-leg formation, because there will be times when a correction actually has a single leg. Like here we have another three-leg formation here. We have on a lower time frame, this is a three leg, but on this 4 hour time frame, it's a single leg. We don't really have structure, minor trends actually forming here. So you consider this a single leg. This is definitely a single leg formation. And it happens often. It's not something that just happens every once in a while. But here are plenty of single leg formations. Got an impulse, single leg formation, impulse, single leg formation, impulse, single leg, impulse, single leg, right? So you understand, get that picture. And then here you have an impulse going down, and you have this multi-leg formation here. Forms this weird little flag formation, right? We have 1, 2, 3, 4, 5, 6, 7 legs there. Multi-leg, it's not that profitable. I actually don't have that many stats on the multi-leg. Most of my stats are based off the three-legged formation and the single-leg formation, and I found the single-leg formation to be the most profitable or highest probability, and multi-leg very rarely comes around. So I can't say that it's the most or least probabilistic setup or not. But single leg definitely isn't. So that's the three-legged, single leg, and multi-leg formations. You can check all that off. Now coming back to this three-legged formation, if we take this three-legged formation and based off of everything that I taught you, again, we take our entry either based off the doji or based off the morning star here. We're going to take it based off the doji, set our stop loss beneath the Fibonacci level, and set our target at the 0 Fibonacci extension. What I found is that if price draws down 50% to the stop loss after entry, it's typically going to hit stop loss. If it draws down 50% halfway to stop loss, it's typically going to hit the stop loss, right? So once I get 50% drawdown, I usually cut the position. All right, as a rule, I cut the position. Okay. Now, alternatively, what you could do in this situation, instead of cutting the position at 50%, you could raise your lot size. Initially, have a 50%, like just cut your stop loss in half, saying it's halfway to the Fibonacci level, and have a higher R that way. Right now, the actual stat is about 34 to 36% drawdown is where it typically hits stop loss. After drawing down 34 to 36%, it usually hits stop loss at that point. But I keep it safe and overshoot at 50%. It's another 20% away. So just to be safe and give the trade an extra chance, right? Now, what I've started to do instead, and I've been doing this for about a year and a half so far, instead of putting my stop loss 50% of the way, I put it just underneath the 3-bar reversal pattern or the doji, and that increases my R substantially. Again, from having a 4R trade with a stop beneath this 61.8 level to a 13R trade. That's why I moved it beneath this, the low of the shooting star. Or not the shooting star, the low of the doji here, right? And even if you enter off of this engulfing candle, off of this morning star formation, you would still have a higher R than if you had your stop down here at the 61.8. It's a 1.93 there. And if you place your stop beneath here, that's a 3.009, right? So that's the benefit of cutting at 50%. Like the benefit of cutting at 50% is you minimize your losses so you can take more trades, right? So you have opportunities to take more trades without having extensive drawdown, right? You minimize your losses over time. And then also, if you tighten up your stop loss, you can improve your profit potential if you know the max adverse excursion for your profitable trades, right? How far does price draw down before it hits target, or how far, or when is it likely to actually hit the stop loss? Okay. How far in the drawdown does it go before it's likely to hit the stop loss? So that is the 50% drawdown nuance, and the final nuance is Fibonacci target stats. Now, personally, I do not use Fibonacci's um, for targets anymore. I use specific levels, but for the system that I used to use, I did gather stats on it on EA and Euro USD. You can go ahead and gather stats on the rest of the pairs if you want to gather the rest of the stats on it. But what I found is if I have a 38.2% retracement, there's an 88% chance and I get a reaction off the 38.2 retracement, there's an 88% chance that my zero target is going to be hit. 88% chance that my zero target is going to be hit. So if I get a JCP, if I have a kill zone, a JCP, and my fibs are lining up at the 38.2, that's a high probability setup, nearly 90%. That's something I would risk A grade risk on. Okay. We also have the stats for the other ones, but they're not as interesting, right? 66%, 55%, 44% off 38.2. Most interesting is that 88%. Yes, you're going to get a lower R, but you have a higher probability of it actually working out. And we want to put ourselves in the best position for these setups to actually work out. We want them to work. We don't just want to have outstanding R's. We want the trades to work. We want our trades to hit target. We want our win rate to increase so we can have more winning trades. All right, and if we can up our risk on these high probability setups, then we recover the profit we would have made if we had a higher R instead. Higher with a lower probability. All right, same thing on the 50. We have an 82% chance of zero target being hit. We have a 84% chance of the zero target being hit off the 61.8. On Euro AUD 38.2 in a bear situation, there's a 98% chance, 91% chance that the zero target will be hit. A 70% chance that the 27 is going to be hit. Right? So I could go through more, but just know that the zero target is the highest probability Fibonacci level to target. That's why I just targeted this zero level and I didn't go all the way up to the negative 61.8 or above or to negative 27 or negative 41, right? So that means in this situation, I have my highest probability flag set up, the three-legged formation. It's underneath a doji, so it went beneath the low of the second leg. It went beneath the low of the second leg. We have this doji, which is our JCP setup. It's at a kill zone. It's on a Fibonacci level, a 50 Fibonacci level, and we can move our stop loss beneath the low of that doji candle, and our probability of the zero target being hit is 82%. 82%. So those are all really good high probability things telling us, hey, you can increase your risk on this trade. This is an A grade risk setup. If you're doing A grade, B grade, C grade risk, if you're just risking the same amount on every trade, this is one of your best setups. All right. Now, I will say the best setup is the descending channel off a daily level, daily or weekly level. That is the best setup that out of everything. But you have this high probability setup, 82% chance of it actually working out, hitting that 0% target, and it's 13R. Risk 1% on that, that's 13%. Risk 2% on that, that's 26%. So really good trade, really good setup, and those are the nuances. That's the nuance video. If you guys have any questions, comments, or find any other nuances, please go ahead and comment in this comment section. Please. I'd love to figure out some more nuances to these setups. If you notice some things on the single leg that I may not have noticed, or if you find out you have different stats than I do, go ahead, share it, and we can all help each other out and progress in our trading journey faster. Appreciate you watching. Catch you in the next video.